All right, all right. Welcome back. How you guys doing today? Let's start another video. And you're going into the holiday season. These things, markets have a tendency to go higher. Nobody really wants to sell, so it's not going to be a very in-depth kind of video as it would be on other days. But nonetheless, we'll take a look at what's going on, and we'll talk about a few things. Charting. We'll talk a little bit about mechanics of trading and so forth. Now, I had a question today. Is it time to buy? Is it time to buy? And my answer to that is that this is when you buy. Okay. You don't need to be a hero here, nor do you need to be a hero here. Okay. When people are not talking about the stock market, that's when you want to own the stock market. When it starts to get volatile and everything gets screwed up and everything looks fucked up, you want to reduce risk. Okay. Um, some people are going to tell you, well, just buy and hold over the long term, and that's great for somebody that doesn't understand what they're doing. I think that's fantastic advice. But for someone who is interested in understanding better how to um, manage your money, you want to be fearful when everybody else is fearful in the sense that you want to reduce risk. Okay, it doesn't mean that you go picking bottoms and tops because that's how they spin it, right? Well, you're trying to pick a bottom and you're trying. No, no, it doesn't work like that. The money is made here. Okay, and then if you want to get a little bit more, you know, savvy with your trading and investing, then you want to identify these places, these areas when things get really fucked up, and especially this time around. Okay, because this is a depression. They may not call it that, they may not behave as such, but it is. It is. It's a very, very big problem that we're dealing with. And it's not COVID in of itself. Forget about that. It's the damage, the socio-economic impact that matters. And how long is it going to take to really recuperate from this when the economy is dependent on what, right? Stimulus, helicopter money. Well, let's get rid of college debt, right? And then we'll spur on demand. We'll always do these magnificent things to try to keep the economy going. But other nations don't do that, and they behave just fine and they recover just fine. So when you are in a position where you're depending on helicopter money for the economy to keep going, you're in trouble. You are really, really in trouble. Something fundamentally wrong is going on with the economy. Um, so we'll talk more about this perhaps in a video. But think about these things. Remember, there's a lot of small potatoes out there that are trying to oversimplify things. Um, oh, look, if you would have kept buying the dip, then well, to buy the dip, you got to sell the rally. Can't buy the dip if you're already in it. Well, yeah, it's back up again. Okay, it's back up again. But what's back up again? It's the fangs, right? It's the top uh, 6, 7 companies in the index that are high. If you don't own those 6, 7 indexes, you can sit here and tell me, well, the 401ks did great. Really? Yeah. What about all the other stocks? Right? They didn't do as great. The other 493 stocks. Technically, it's a 505 stocks, by the way. Little fun fact: it's not 500 companies, 505, because they'll have Berkshire A and Berkshire B and Google whatever. So, little fun fact. All right, so let's get started. Hello, Alessandro. Hola. So we talked about the equal weighted S&P has risen higher. So that means the broader market, the other 497 stocks have caught up. more or less with the leading fangs. Okay, so that's good for the 401k portfolios. They have risen, and they are now just about 5% from where they were at the beginning of the year. Okay, dividend weighted. Okay, not much going on today, and we don't expect a whole lot. Okay, VIX is continuing to remain low. New York Stock Exchange, nice little double top there. Dow Jones, slightly above. And a lot of people are sitting here saying, oh my God, it's above 30,000. Isn't that wonderful? Right? They're all celebrating and like, oh, look, it's great. The economy is great. Everything is great. No, the economy has nothing to do with the stock price, right? Stock prices are up only because of stimulus, free money, QE, helicopter money. Right? It has nothing to do with the economy. And the problem with that is that uh, they're extremely expensive. Okay, so when you look at uh, the earnings yield, 2.72. This is historic. We're going back to 1880. 1880. Okay, and the valuation that you're getting for the amount that you're paying is garbage. And you can sit here and tell me how great the economy is and how wonderful things are and V-shaped recoveries and oh, oh, you missed it. Oh, you did. Oh, you can do that till you're blue in the face. They're extremely, extremely expensive. And by the way, corporate profits did pop to 2.1 trillion. Okay, I'm going to take this off of log. Where is it? Log. Okay, let's get rid of that. All right. So you saw a nice big jump in corporate profits. Well, that's usually the case when you fire people, right? You get rid of excess uh, cost, and you get a whole bunch of money from the government, and then you give a whole bunch of helicopter money. What's going to happen? That's going to funnel through the profit sharing, right? This is part of the building an economy from scratch. If you haven't seen those videos, please go back and take a look at them. Okay, so if you're going to pump in money into the productive economy, those dollars are going to be spent, and they're going to be saved, and they're going to become profit savings to the top 5%, and then those dollars are going to go into the stock market, which is going to push the stock market higher. Okay, now when you're looking at the corporate profits and they're bouncing, they're like, oh my God, look, it's doing great. Yeah, well, you can fire people, keep having that revenue come in, and show a very nice profit. But the reality of the situation is, since 2012, corporate profits have not risen materially, right? So be aware of these things. The perma bulls, they're sneaky little fucks. All right, S&P 500. Let me bring this down a little bit. Okay, popped today. Nice little bull flag here. Again, I'm seeing this the first time for today, so it's not like I prepare these things. Okay, nice little bull flag. Look for a little bit more upside here. All right, perhaps it will come during the close. Nasdaq, same thing. Nice little bull flag. Right, we talked about this yesterday. I took the trade uh, in the morning around, I don't know, 10:30 or whatever it was. It popped up, broke all these trend lines, right? It's a confluence of resistance. You got the volume point of control right here. You got the descending trend line in the structure, which is a 1, 2, 3 down. Okay. You had the bigger term trend line coming in here. So this was a very confluence. You had all the congestion right in here, building pressure, and then boom, off it went. It could have went the other way just as easily, but it didn't, right? So it went up, broke out. We said yesterday that there will be, the bias will be to the upside, okay? And this is where we left it off yesterday. We said it's correcting through time. This is good. It's a high base, building pressure for the next move up. It came in after hours as we expected. Then we got a nice little correction. Okay, now we're building this flag here. Okay, and it's a 1, 2, 3. If you can't see it, let me clean that up for you. Okay, it's a 1, 2, 3, and then off it went. All right, so nice little bull flag, pointing to the downside. Up is the next area. Okay, so now that we have the structure that has broken and is pushing higher, now we can start to build part of the structure. Okay, so the bias is to the upside so long as it remains above this trend line. Right, the burden of proof is on the bulls, and as I always say, in this latest rally in the stock market, let the bulls bid up price on themselves. Let them. Let them, please. Okay, this is what you want. Because eventually, these guys are going to run out, and there's not going to be another guy to buy at a higher price. And then what happens? And all those bulls turn into bears. And all those bears, they start puking it up. Right? Cool. Can you guess where the point of control is, by the way? Right? Somewhere in here. So, the volume, you know, uh, by price is nice. Okay, it's nice, but again, you don't necessarily need it, right? You know where the point of control is just by looking at the chart. Now, sometimes it's not as obvious, but and they do help. They do. Um, for example, look at the structure. Okay, the structure is a nice little P. What is that? That's a short covering rally. All right. So the people that were uh, battling in here, okay, what happened was that the shorts got squeezed, right? So that's why you have that formation, the P formation, right? And they're getting squeezed. Right? And eventually, uh, you know, that's going to come to an end, and then we'll see how price behaves, okay? So for now, the burden of proof is on the bulls. Let them bid up price on themselves. That's fine. Uh, let's see how far this runs. All right. We talked about small caps with their PE of like 1 gazillion. Every time I say that, I just increase the number because that's the reality of the situation. So you had a nice rising wedge. We said this is going to be a resistance area. Okay. We had a nice cup and handle, broke out of this incredibly bullish move out of the wedge. We are in a bigger wedge, and we said right in here you're going to have some resistance. Okay. Doesn't mean that it can't go higher. I'm just telling you where the potential area of resistance and reversal is, right? And that's the point of bare knuckle charting, to find those key areas. So we found some resistance here. We came back into structure. It didn't collapse. That's a positive, subtle sign, right? That from failed moves comes fast moves in the opposite direction, and that didn't happen, at least not yet. Because when it comes back into structure, usually you'll break the structure, right? And then perhaps start to bounce from there. All right, so transportation's pulling back a little bit today. Okay, previous highs. Right, so potential area of resistance again. Right, Google and the fangs. Nice little pop. Right, look at that. Broke down. Didn't do a very good job of it, and then broke this trend line here. Nice little pop, testing the previous high. Nothing special, right? Nothing special. All right. So now we end up with this formation. Okay, something like this. The top line is not valid, but it looks something like this, which is, for now, it's looking bearish, right? If you were to count it, first counter trend move, 1, 2, we're in a 3 up, and then we'll look for downside. All right. World Stock Market Index, very nicely following through, wave 3. Airlines following through very nicely. Made a new high today. Airlines continue to push higher on the larger index. It's not an ETF, so the index is pushing much higher today. China having some difficulties. There's a lot of talk about the corporate bonds, some liquidity problems, and I think it's just one of those things where cry wolf, cry. How many years have we been listening to this private debt problem in China? Private debt in China. How many years? 10, 12, I think by now. It's always the same song and dance. Whatever. I I don't. I'm not going to put a lot of weight into that. I just think it's one of those headline marketing things. I'm not saying that they don't have it. I agree. Yes, but you know, where is it? Where has it been? I've been hearing about it for 12 years. Anybody see it kind of collapse? It's good to pay attention to it, of course, but don't put too much weight into it. All right. So it's funny how it comes out right at the structure, right? One, two, three up. It's a bearish structure. This looks like it wants to start to break down, right? And now they're starting to talk about the same old bullshit. Oh, it's corporate bonds, the private debt, blah blah blah. Yeah, whatever. They're gonna blame that when it does correct. I promise you. But it doesn't mean dick. We've known this structure for a very long time now. Emerging markets continuing to be up against resistance. Uh, this one is pushing a little bit higher. Japan doing really nice. Okay, it's that rising F flag. Okay, I thought we marked that yesterday, but I guess not. All right, right up against the resistance. All right. Australia doing really nice. Okay, continuing to move higher in a wave three. Right, remember wave three. Nifty 50 pulling back a little bit today. That's India. Same thing with Korea. All right, testing the previous high. Right, wave three up, top. Yeah. Breakout in Europe. It's interesting. Let's see how much this runs. But again, it's a wave three. You should be able to see that. You don't need my help no more. For the new guys, get used to it. Germany, right? Testing, head test again. Not much of a follow through after breaking this trend line, right? So let me adjust that a little bit. So we'll see. We'll see. Again, I think the head test will probably hold and we'll follow the rest of the markets down. UK still remains in this megaphone structure, testing the previous high. Again, it's a wave three. We've had this structure in here for a very, very long time. Broke down, psych, boom, straight up. Okay. Uh, Denmark holding up very nice. Okay. One of the strongest economies in Europe. Taiwan, nicely in wave three. Brazil broke the previous high. Saudi continues higher. Going for a head test is what it looks like, huh? After breaking. Technically, this has confirmed the head and shoulders, right? Uh, so I'll call it a head test. I'll call it like something like this, and then look for down. But oil is rising, so that's good for them. We'll see. We'll see how it all plays out. Oil, let's talk about that. It's up to 45. Okay. Burden of proof on the bulls has to maintain this trend line. It broke out from this sideways move. Right. This was a very big sideways move. Look at this. 27% back and forth. It's exhausted a lot of energy from the bottom here, right? A lot of energy. I actually owned it right in here, and then it started to get really kind of choppy, weak looking. So I kind of panicked and sold. Wrong. Whatever. Okay. Yeah. Bitcoin. All right. We've talked about this, that we could see a correction here, and there's nothing wrong with it. That's okay. It's okay. All right. So you could see a nice correction all the way down to about, let's say, 17,000, and then back up again. All right. Let me get rid of this. Fix it up a little bit. Clean it up. All right. And then if that doesn't hold, then you have the bigger support, which is down here. Okay. And if it's a tight, 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 and this does break down along with the rest of the market, you could see it come all the way down to 14.5 to 15,000 in Bitcoin. And everybody will be like, ah, you see? Yeah. Yeah, Bitcoin, it's not going to hold. And then that's when I'm going to be buying some more, and then it's going to go up, and then, oh, look, Bitcoin is up. It's not sustainable, blah, 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 whatever. Gold. All right, continuing its wave 3 down. It didn't make a new low today. All right, so let's see when this move finally ends. And again, if it starts to break this trend line, we're going to start looking for a much bigger move higher. All right. All right. Fear indicator is right at support. I kind of disregard this, and I shouldn't, but I'm trying to get the essence of what the trend is. Real estate broke out, no follow through. Commodities really doing good. Wave 3. Copper, beautiful. Base metals, beautiful. Agriculture, not bad. Precious metals suck. Commodities, beautiful. Sugarcane, pulling back. Remember, we're waiting for a correction. Right? And some of these commodities, they need a correction. And that's why I'm not like balls deep, like excited about commodities, even though I think they're going to go up over time. It just seems to me like the market wants to pull back, wants to have some kind of a correction. Commodities, everything is going to be sold. Bitcoin, commodities, everything that's bullish right now. And then that would be a good opportunity, provided it's not something catastrophic. That would be a good opportunity to really start getting some nice buys in some of these areas. Okay, for the longer term. All right. It just seems like there's something in the markets that just like you see this, you know what I mean? Like it needs to come back. It needs to break. Wheat starting to break now. Okay. So keep an eye on these things. Steel doing really, really good. Base metals doing good. Soybeans are the only ones that are kicking ass in terms of food. Dollar broke. It broke. How convincingly did it break? Not very, but it broke. Okay. Which brings me back to that chart that I am interested in. Where is it? By the way, this was the call yesterday for the breakout in Nasdaq. Um, and this is what it looks like today. It looked like, come back, baby. It was right hither. Okay. That was the call yesterday to subscribers. Worked out very nice. Bravo to me. All right, let's get back to the dollar. Where is it? I thought I had the double charts up. Is it? No, it's not this one. Anyway, I won't waste time on it. But anyway, if you see the dollar is falling and then the S&P is going higher, and I said keep a an eye on this, okay, because stocks could be rising because of dollar devaluation. Um, Japan, okay. More and more, it looks like this is going to need to correct to the upside, where the dollar is going to break out, right? You got the 1, 2, 3 structure. You didn't have enough selling pressure down here, all right? So you need some kind of correction out, and then perhaps it would fail, or it would just take off to the moon, whatever the case may be. The structure does need to correct, or it needs to start falling apart quickly, all right? Euro finally broke out. Um, I've been talking about this for a while, right? Dollar weakness, euro bull. So let's see how well it does next week. How much follow through there's going to be. We need to break this other trend line. Okay, this is a much longer trend line. What are all these blue dots here? I get distracted. I'm sorry. ADD. Yeah. So if it breaks, if this consolidation, and it looks very healthy, by the way, huh? The consolidation at the resistance area. This can really have a very big move to the upside. Okay, so keep that in mind. That this, and I should probably draw it so nobody can say that I'm doing after the fact analysis. All right, this whole big consolidation here that broke this tight, tight, tight that should have broke like this, it didn't. Instead, it corrected through time, right? Pressure, 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 and boom, off it goes. Right. So now you're looking at the US dollar Japan and you're comparing that to the euro. So you're saying, okay, which one is right? Which one needs to correct? Right? And which one needs to follow through? Which one of the two is it going to be? Right? It's not, you know, pick your poison. It's conflicting, right? But when you look at the pound, again, we're bullish on the pound. Look at this beautiful head and shoulders, right? It's small, but it's good enough for government work, right? Right? You see it? Right shoulder is a little bit anemic, so you could have a little bit of a pullback, and it would still be a head and shoulders, right? But if this breaks, off to the races we go for the longer term. All right. There's more to this than what I'm telling you, but you have to subscribe for that. US dollar, Turkish lira, back up again. US dollar, ruble, falling down. USD CAD, look at that one, right? Testing the previous low. Okay. Now is not the time to short it, but it's looking like it wants further downside. Um, Yen USD should be down. Yeah, it's USD yen, right? You want the dollar to go down. USD won. Yeah, we're gonna get to that in just a minute. Um, yeah. So what it looks like now from this move that you got the big compass move down. Not much of a pop. You have this consolidation in here, right? Which is indicating a wave three to come. All right. It's not very chartable. Okay. You can say it's a double top, but you know, it's just a consolidation is the way I look at it. I can easily see another move higher and then down. That would make a lot more sense to me. That would be more chartable, right? 1, 2, 3 down. But perhaps this is it, and that's okay. That's okay. Australian dollar doing really nice against the US dollar. New Zealand dollar is just breaking out incredibly bullish. Again, these two long term, any pullbacks, just buy them and hold them. Come back a couple years from now, we'll talk about it. Again, if you want the more in-depth analysis, you got to subscribe. Don't forget, patreon.com/RealMacro. Okay, patreon.com/RealMacro. Come on down. And don't forget to please like and subscribe, the little thing down there. Uh, it will help me a lot. Not that I really care to become one of these internet sensations. That's not my goal. But since I'm doing them, why not, right? Why shouldn't people get another perspective uh, on economics and investing? I think it's a good thing. Otherwise, I wouldn't do it. All right, so here is the $1. We talked about this bear flag forming, little baby one, but it does seem to point to more downside. All right, two key areas. The first key area is going to be at 6.4, right, somewhere here, and then the second one is going to be the previous low at 625. All right. Now, um, always when you look at these things, measure them, please. Okay, this is an 8% drop down to the support area. It will be about 10, 11, and then the next area is going to be about 13. And then if that gives away, then you're going to come back all the way to 15. All right. So pay attention to these things; they're important. Um, Here is the index of the euro. Right, broke out, came back, tested, breaking out again. The bias again is to the upside. It's dollar weakness to continue. Based on the euro. Euro is the second biggest currency, reserve currency in the world, right? So let's take a look at the small caps. I mean the small caps. Oh, I'm tired. Uh, the 10-year yield, right, broke out. We're looking for more upside from this one. It's going to be interesting to see. Again, we're talking about that compression between the 10-year and the S&P earnings yield. They're on a collision course. Who's going to win, right? I don't know. We'll see. Um, Aggregate bonds are pulling back a little bit today. Okay, that's okay. Junk bonds continuing to push higher. And this is what I mean. Let's just take one moment here just to kind of pause. We are in the now economy. What's the now economy? The now economy is versus not the now economy. The future economy was based that you went out and bought a bond and you gained 5, 6, 7%, whatever per year, right? And then you usually gave these bonds to little kids. So when they grow up and they go to college, they'll have some money and the money will grow over time. And, grandparents used to do that kind of shit. So remember, we used to buy bonds so we can have future income. In the now economy, that's not the case. The now economy is about you paying me today, right? The next minute, the next hour, the next day, the next week, because bonds are no longer bought because of the interest rate. Interest rate is zero, okay, or close to it. So why are people buying bonds? Because they want to get paid tomorrow. They want their money tomorrow. They want to sell it to the Fed tomorrow, right, at a higher price. So when people say, well, QE is not, um, it removes money from the economy, that's not true. It's not true. Because when you issue a bond at, I don't know, 100, and then you're going to sell it at, 101, well, you just added another dollar, right? Because the Fed bought it for an extra dollar. So you're not removing money. You're just getting the money now, as opposed to 10 years from now, or a year from now, whatever. You understand? So we're in the now economy, and the now economy is problematic because if you're not getting paid tomorrow, people lose interest, and when they lose interest, they start selling shit, right? So again, what got us to this point? What got us to this now economy? Well, what got us here is excessive money creation, excessive debt, too many dollars in the hands of the few. So everybody's chasing yield, pushing up stock prices, pushing down interest rates, pushing up bond prices, pushing up real estate, pushing up commodities soon, and then what's left, right? It's going to be about who can sell the fastest to take the profit. That's typically the next, logical step. When is it going to happen? I don't know. I don't know. But again, you're going back to 1880 and even before that, 1870, and you're looking at you're buying stocks with 2.72% earnings yield. And you're running around and saying, well, no, that, based on the forward-looking intrinsic value, I don't know. When bonds start to behave like stocks, and the only thing that matters is price appreciation, right? That I need this to keep going up. The aggregate bond, the price of the bond needs to keep going up, because I'm going to buy here, and then I'm going to sell here, and then I'm going to buy again here, and then the Fed is going to buy here, then I'm going to buy here, and then I'm going to sell it to the Fed here. Okay, this is the now economy, right? So the higher the bond price, the lower the interest rates. So what are you focused on? Like a stock, the price appreciation. Problematic. Problematic. I don't know. Banks pushing higher. Uh, Another ETF, banking pushing higher. Biotech, not doing a whole hell of a lot, but it does look like a bullish formation, right? You got the compass right here. Okay, 1, 2, 3, fully formed, high basing, right at the uh, uh, top of the channel. Okay, might get one more down, right? So you can do the count correctly. 1, 2, 3, well, maybe one more down. If something again catastrophic happens, everybody starts selling everything and anything under the sun, and then off you go. Now, before this recent move, this is what it looked like. Okay, you're seeing it like this. I'm showing it to you what it used to look like when I used to look at it. And then this one was a fully counted 1, 2, 3. Right? Came out, popped out, high basing, looking really good for the next move higher. And then what did it do? A fuckery move, straight down. Right? Failed back into structure, straight down, and then boom. Right? So that's a fuckery move, is what I call it. And now you're high basing above this previous structure. So again, the bias to the upside. But again, now that it's kind of paused a little bit, it's smarter to really expand the structure, see what it does next, because there is a possibility that this is just an expansion of the rising F flag, right? And then you'll get another move down, and then you'll see the next move up. Okay. Now, if it breaks down here, okay, if this breaks down, then the previous low becomes a point of reversal, and then if that doesn't hold, then something really bad happened in biotech. All right, but for now, it's high basing. We're anticipating an up move, and this consolidation is going to be enough to push through this upper trend line. The bias is to the upside until it starts to break down. All right, water. All right, I love this. I hope it kind of corrects this one, because I would like to participate in some kind of a correction and then take it to the long side. I think water is the future gold. All right, so let's take a look at hotels. Previous high, it's testing it. Let's move this a little bit higher. Oops. There it is. Okay. Burden of proof is in the bulls. Double top. Let's see if it corrects. Now, let's talk just a little bit about the recent move And small caps, jets, which I think I kind of skipped here, if I'm not mistaken. No, I didn't. I didn't. I talked about them because I was okay. Here's my problem. I never like these kind of moves. I don't like them. I don't like to buy them. Sometimes there is a clause. For example, Turkish lira, US dollar. That's okay because the fundamentals agree with the chart. You know, it's going straight up. If you can't buy it, you buy it, right? Because it's just going straight up. That's okay. But in these kind of indexes where it starts to get euphoric, where they're selling you fucking, the moon, um, I don't like them. I much prefer to wait for the pullback. Okay, wait for the pullback. And then if you still like it, buy it, right? You have a nice risk reward right down here. Okay, buy it here. There's nothing wrong with that. But this, and oh my God, look at the airlines and they're breaking out and they're amazing and they're so wonderful. That stuff, again, it's an advertisement. And if it's not, then it's not. But to me, this is advertisement trying to get me all excited. Um, and it's just trying to fuck me. That's the way I look at it. Call me paranoid. I don't know. But when you see hotels doing that, when you see airlines doing that, and the economy is not there yet, even if it was, but if it's not there yet, you wait for the pullback. Okay? Don't chase shit, please. All right, let's take a look now at the FANGs individually. All right, so we had a nice little pullback in Apple. Apple is the leading indicator in terms of the stock market. It's been lagging of late. It broke down a while back. I think you will want to get bullish again if it were to break this trend line to the upside. Okay. Um, Till then, the bias is to the downside for Apple and the market. Longer term. I'm not talking about this short term trading stuff. Amazon, little expansion here of the flag. All right. Popping up again. Right. Little wedge thing going. Microsoft broke out. All right. It's a nice little breakout there. Maybe goes for another head test. I don't know. But again, it's a head and shoulders. A little bit expanded. Facebook, little pop out, pulling back a little bit. All right. Let me draw this a little bit better. There you go. Little pop out. This I should probably change the color because it's just an arrow. It's not something meaningful. Move it here. Okay, so a little bit of a pop out, right? Little relief. Netflix, little expansion going back up again. Still looking for downside. Google, right? Not doing a whole hell of a lot. You can make an argument this is a bull flag. See it? And I think this is how we're going to show it from here on in. I think that's a little bit better. All right. So it's fully formed. 1, 2, 3. Very nice. So you can say this is a bullish formation. Oops. All right. Then we can see a little bit more upside in Google. Nvidia. Little expansion. Tesla. Look at that. Last time I marked it, it was 63, I guess, huh? Now it's 576. Look at that. Just because it was added to the S&P. Wow. Right, Delta continuing to push higher. It's good. American Airlines broke out. It's good. Uh, Southwest, very nice. Alaska, testing the previous high. Okay. JetBlue, testing the previous high. Spirit, testing the previous high. Allegiant, same thing. Hawaiian Airlines, nothing there. SkyWest, it's a commuter, it's a smaller airline. It's a feeder. Right? Ryanair, high basing. EasyJet pushed a little bit higher today. That's nice. I still think this is undervalued, but I would wait for a pullback at this point. Copa Airlines pushing higher. China Eastern Airlines, high basing. And that's about it for airlines. All right. So that's about it. Let's just take a look at some of the southern currencies, Southern American currencies, because I had a little video and I said look for the Southern American airlines to increase in value as commodities strengthen and the dollar weakens, right? So you look at Colombia, it's doing better, right? You look at Uruguay, improvement for sure. Brazil, right? Improvement. Remember, anything that's going down is the dollar's going down, and the opposite currency is going up. Chile has remained stable, and Peru not so good. Indian rupee is coming down. That's not South America. All right, and you can follow along on this. You can follow along. I have posted it somewhere. There it is. Somewhere here. Okay. Just click the button here and then it'll show you where the call was made and where prices have gone. And anything that's down is the dollar's down. Okay. So there's quite a nice little things here. Okay. This was a corporate profits. I don't know if they updated them yet. They haven't, but as we know now, right, this is going to pop. This popped. All right. So it was right at support. It popped. All right. This one I think is Zoom. No, this is not it. Here it is. Zoom versus the S&P. And we said look for Jets to push lower and Zoom to go higher as lockdowns continue. Instead, we got both of them going up. Jets more so than Zoom. So that's okay. You know, it's still a good trade. You're not losing your ass, right? And that's a nice thing about these double kind of trades. They don't kill you. It will be interesting to see how this is going to continue going forward. Okay. Yeah. All right. So let's get back to the Nasdaq. 10 minutes left to go in the trading session. Well, that's not what I want. All right. So it tested the previous high. Fair enough. Pulling back a little bit. Has to maintain this support area. Okay. Let's see how it behaves into the close. And again, this is holiday tomorrow, so happy Thanksgiving to everybody. It's going to be different this year for sure. For some, Trump bots, they're going to have, you know, rallies and shit. Super spreader events. Interesting people. So yeah, so we're double topping here. When you look at it, it's kind of funky, right? The whole thing looks kind of funky. You have this, you know, this nice thrust up. This is not really, you know, the classic kind of bull flag. You get the breakout, doesn't really follow through. You know, a little funky, a little funky. You go back to this, right? Look at this, and you're saying, okay, well, this is the compass, right? The thrust down move. You got this whole big structure that formed a 1, this whole big structure that formed a 2, and now we're in this really kind of funky weird looking structure going to the upside. And, the whole thing in of itself, if you were to chart it, and let's say it just ended here, would look like a 1, 2, 3, and then down, right? And that's why I'm saying it's a little bit funky. You don't want to hold on to the long side too long on this one. Okay. Anybody have any questions? Here I talk about how to properly read the unemployment claims. Okay, because the chart kind of looks like this, and everybody's talking about this. They cherry picking data. Oh my God, look at the improvement. Yeah, well, that's nice, but in reality land, look where unemployment weekly unemployment claims are. Way, way, way above anything still than we've seen in the past 50 years. Way above. Um, and again, it doesn't include the unemployment claims. Okay, I mean the pandemic unemployment assistance. Okay, that's another 310. We're talking about a million people. A million. Yeah. We used to be at 250,000, right? And that's why I'm being sarcastic here. Winning, look how expensive the S&P is. Look at the earnings. I mean, come on, guys. Please. Promo bulls, they kill me. Anyway, let's look at the market internals. Let's see what they're doing today. Flat for the day. Discretionary is leading. Good. Information technology is leading. Good. Yeah, that's the way it's supposed to look. Real estate, not so much. Utilities, not so much. Energy, okay. Yeah, to the bottom. Materials, towards the bottom. And industrials, eh. But this is more of a normal looking bull market. Right? On a daily, obviously. On a 5-day, you're up 1.83%. Energy, financials, and consumer discretionary leading. Lagging healthcare, real estate, utilities. All right, so not very bullish looking. Not very bullish. All right, so another 4 minutes left to go in the training session. Let's see what this does. Just mark this area here. Right, the buy still is to the upside going into tomorrow, provided it stays above this trend line. The consolidation here might require a 1, 2, 3, something like this. Okay, and then possibly, if you're a bull, you want to see something like that. All right, if you're a bear, double top, boom, right back down we go. All right, and with stocks so expensive and not a whole hell of a lot of QE coming in and no stimulus coming in, cases rising. Uh, it's difficult to be a bull right now. Okay. TSA traffic, a solid 1 million um, in the past week or so. Solid 1 million. So that's good. That's a little bit of an improvement from previous. But again, it's the holiday season, so that's okay. Corporate profits we talked about. Um, Again, you look at the balance sheet of the Fed. It's slowly grinding a little bit higher, right? It's going up a little bit. For tomorrow, I don't think I will be doing a video, just so everybody knows. Um, I'll probably do like a private video, not a private video, like a not a live chat. I might do a couple videos. Typically, what happens in holiday seasons, for some reason, people look at videos on YouTube when they're bored and they're stuffed, and and they want some topic of conversation. So I have a couple ideas in my head that I want to talk about, and that's uh, the way the economy is today. If you think about it, it's Facebook, Google. Well, these things are based on advertisement, right? And there's only so many dollars of advertisement allocated each year. Uh, Twitter and whatever else. Is this the kind of economy that we want to really, be like bullish about? Right? We need something like nanotechnology or space exploration of collecting resources. I don't know, some kind of new industry if we are to continue to go forward. So just a couple things that are running through my head that I think about. We can blame politics to and incubate economists to the we're blue in the face, but the reality of it is if you don't have a nice strong industry that's going to come in and really push everything higher, I don't know. All right, so there's the market close and 4 o'clock. Um, Still bullish for tomorrow into tonight. Uh, that's about it. Again, thank you very much for coming and joining me. Please don't forget to like and subscribe. I hate saying it, man. I feel so gay, but whatever. I gotta say it. Don't forget to subscribe, patreon.com/RealMacro. And have a wonderful Thanksgiving. Stay safe. Don't give each other COVID and shit. Um, and I'll talk to you soon. All right. Thank you, Alessandro. Have a good night, and I'll talk to you soon. Bye bye.